Yo, what's up, you guys? Welcome back to another weekly market update. Today, we are going to take a look at the market from both a technical as well as a fundamental perspective. Without any further ado, let's get straight into it. Now, the first thing we obviously have to do is check out all the news that we got last week. We had a negative CPI reading, which basically dropped the index. We saw a pullback at the moment due to the core retail sales that came through positive. And unemployment was also lower than expected, meaning that less people are losing their jobs as well. Again, I do expect the dollar index to further correct itself, especially from a weekly perspective. But without any further ado, let's get straight into it. We've got the consumer confidence coming through, when we've got the GDP, which is the gross domestic product, which is going to be released for quarter over quarter. And then we've got the unemployment claims core price index, which will be released for month over month. And then we've got the revised University of Michigan consumer sentiment. Consumer sentiment always refers to how people feel. You know, when people are in their feelings, how do you feel about the market? But obviously, this is what I was referring to over here. Firstly, we can see the market actually came back to this previous level of resistance, tested it as support, then broke up below that, broke above that, came back, tested it as support once again. Now we can see here the market had broken below this level of support, and once support gets broken, it becomes resistance. So I do expect, excuse me, from a weekly perspective, this market to continue higher in the new week, and then from there I will give you guys another update. So if you drop down on the daily time frame, where about is that located? There we go. However, very important to keep in mind that we are faced with current structure at this level. I would probably just be careful when the market opens, because I would wait for a clear daily close above this level. This would confirm the move up for the market to continue higher and test that previous level of support that is acting as resistance, as we identified from a weekly perspective. Now, Dow Jones and the gang, as we all know, heavily overextended. We have broken and closed above this level. The pullback is expected. It is just a matter of when it's going to come through. However, what I would suggest is wait for the market to print at least one red candle, and then from there we could basically anticipate structure in the market. At the moment, there is no structure created, and we can see here, as you're going up here, we only have green candles. This is the last time the market had printed resistance, broken above that. There is no indication if this market's going to come down. If we at least get one red candle, we can wait for a break below structure on the retest, enter, ride the move down for the market to come back and test this previous level of resistance as support. I would also not be thinking people are going to trade, even though some people did say that they're going to trade through December. Yes, Andy said that he's going to trade right through December. So people need to still sign up for the signals, right? This move on the S&P 500 that we have here is still based on this structure that I do expect the market to come and test. We can see here we had moved up slightly higher. I would still like to see the market just go hit that level before coming down. The reason why it's so difficult for me to analyze these pairs at the moment is because there's no structure in the market. There's no indication in the market. We know we are very bullish. However, we need structure to confirm a pullback in the market. Now, the German 30 here is a good example. We can see here the German 30 had printed this level of support. The market broke and closed below that level, came back, retested. So this is giving us an indication that the move down has finally started. Then we can see how the bears or the sellers started stepping into the market. As opposed to looking at the stock market, you just see green candle after green candle after green candle after green candle. And then next up is the NASDAQ 100. The NASDAQ over here, from a daily perspective, NASDAQ had printed structure. So we can now use this structure. In fact, we are going to use this structure here. And what I would suggest is we wait for a clear break below that level on the pullback. Definitely ride this market to the downside for the market to come in, test this previous level of resistance that got broken. That would now be acting as a level of support. Again, like I said, we're moving into festive, and stock markets normally boom because a lot of people spend money on presents and buying iPhones, and all these companies are listed on the NASDAQ, and because of that, stocks normally gets a boost because consumer spending is on the rise, right? Now that's NASDAQ, and then I forgot to add gold over here as well. So let's do that. You can see here gold went exactly as anticipated. Said we can expect that move down. Now gold is also yet to form what's known as an inverted head and shoulders pattern, and this pattern is normally considered a bullish pattern from a technical perspective. So I would just wait for gold to pull back slightly lower and then definitely continue higher. Like I said, the market would form an inverted head and shoulders pattern, an impulse correction, and if you take the Fibonacci from the low to the high, we could potentially get a 61.8 Fibonacci. That is lining up perfectly with this structure, but also to form the right shoulder as well. Guys, that is it from my side. I want to say thank you for your time, and as always, please let me know down in the comment section if there's anything you want for me to cover. And as always, cheers for ears.